management. I want to thank you for joining us for our USDA report roundtable discussion. Today, March 8th, the USDA released their monthly supply and demand report, which highlighted 22-23 ending stocks for both the US and world, and also touched on South America production. Today, I am joined by Pat McLaughlin, Stu Hughes, and Rich Berg to discuss the report. Pat, would you like to give us an overview of today's report and touch on South American production?
Sure, Brenda. Well, the U.S. category of grain ending stocks was, there was some minor adjustments, but not anything changing any trends. Corn stocks were up 37 million to 1,342,000. Trade guess was 1,305. Bean stocks were lowered to 210. Trade guess was 221. And wheat came in at 568 million. Trade was guessing 573. So slightly friendly beans, wheat, and a little bearish corn, but not a trend changer. As far as South America goes, Brazil was spot on, 125 million tons of corn, 153 beans. I think most analysts are right there in that same neighborhood. Argentina was clearly the feature of this report and expected to be. USDA did a good job. They really took the axe to Argentine production. Both corn and beans come in 3 million tons below trade guess. They're showing a 40 million ton corn crop, exactly the same as Michael Cordonnier, and a 33 million ton bean crop, which is 2 million above Michael Cordonnier. And there's other analysts in that same area as he is. So they really kind of did a good job there dropping that Argentine production with their problems. And as far as world stocks go, it wasn't a really big deal. It was slightly bearish corn by 3 million tons, spot on beans, and wheat was 267 million tons, 2 million below trade guess. So that's the basic overview of the report.
Thank you, Pat. Stu, what did today's report have to say about the corn stocks?
Oh, sorry, I had to shut off some other people that were trying to up stages here. Very quiet report today. Sorry, there's those guys again. I need to figure out how to shut him off. The only change you saw USDA make today in corn was they took corn exports down 75 million. And I was trying to remember, I think for the last 6 reports, USDA has actually taken exports down by an average about 100 million bushels. There was a couple of months they didn't do that. You're finally getting exports back down to where they were 2018-19 levels. So then I know a lot of talk about exports are off from last year, but 2 years ago was a record year, and it was kind of hard to maintain those all-time high record years. But just 75 million bushels off the export number today. That was the only change. Went to the bottom line. It didn't change feed. We'll have a stocks on hand number here at the end of the month, so probably we'll see maybe an adjustment in the feed number here next month after they get the stocks number. Ethanol grind, they left it the same. It's running about 1.5 million, 2 million bushels a week under the needed pace, but I think they're going to wait and see what the driving season does, see if that boosts ethanol demand. Board didn't really react to the report right away, but mid-late session, it looked to me like you actually saw some more follow the leader type selling. It looked to me like it was more led by the Dees new crop than it was the front end here. So didn't say anything super bearish in the report, but as the afternoon wore on, looks like we had some follow the leader selling here today.
Thank you, Stu. Rich, would you like to highlight what the report said about soybeans?
Sure. On the soybean side, there were 2 main topics. The first one was that the ending stocks were roughly about 6 million, actually about 11 million less than what the trade estimated, and they were 15 million less than last USDA report. The only two things that they changed on the balance sheet from the usage side was 10 million bushel reduction in crush, which that was somewhat expected because the monthly crush numbers have been a little bit less than expectations. But the other thing was an increase in exports of about 25 million bushels, and that's probably partially due to the reduced estimates for the Argentina crop. As far as the meal and the oil, they didn't change anything on ending stocks. Oil is running about 1.936 billion pounds, and meal is estimated at about 350,000 tons. As far as average prices go, they didn't change anything. Still calling soybean average price about $14.30, and then for oil it's about 66, and for meal $465 a ton. For the big differences, like Pat said earlier, they didn't do a whole lot with Brazil one, but they're sitting at about 153 million metric tons, which is really close to the average trade guess of 152.8, and it's the same as the government was last month. On the Argentina side, last month they were 41, and they did drop that down to 33, which the trade had expected them to do more of a gradual decrease, but they got pretty aggressive this time. And then another major thing from the report was that they did not change the Chinese imports. They kept those the same at 96.
Okay. Thank you, Rich. Gentlemen, at this time, I'd like to open the floor if there's anything in particular, either from today's report or any other topics you'd like to cover right now.
Well, one thing I'd like to say today is, these U.S. numbers were pretty minimal changes. Argentina was expected, maybe a little more than the trade guess, but wasn't any big surprise compared to a lot of analysts. There wasn't anything in this report that did anything to stop this $1.20 free fall that we've been doing the last 3 weeks in Chicago May wheat. These corn's down 41 cents from the February highs. I did the math today on a 95% policy. It's now 100% policy very quickly, and we haven't even planted the crop yet. So keep those types of ideas in mind here as we're going close to March 15th and sales closing time, but they can be your lifeblood of a put on your revenue. Back to you, Brenda.
Great. Thank you, Pat. Stu or Rich, anything else you'd like to add for today?
Oh, Pat stole my thunder there. The Argentina numbers were the ones everybody was looking for the most fireworks in, and well below the trade guesses, but yeah, another negative reaction here. So fundamentally, there was nothing in today's report to show a big sell-off, but I think just some technical selling here. We may have to get down to 550 in the D's to find some technical support. Seems like that was the area that we got down to last summer here. So follow the leader selling here for right now in corn.
Right, on the bean side, Argentina is going to continue to be a market mover. I mean, the weather still isn't getting any better, and they're still throwing around even lower production numbers. And then after that, probably the next two market movers will be the March 31st planting intentions report, and then obviously the planting weather for here.
Thank you. I'd like to thank you all for your input today, and thank you everybody for joining us for our roundtable discussion. For up-to-date commentary, please make sure to visit our website, midwestmarketmanagement.com, and also follow us on Facebook. Have a great day.